Welcome to my channel. I'm so glad you're here. Today we're diving into something really important that you won't want to miss. If you enjoy thoughtful content, don't forget to like, share, and subscribe. And follow us on whichever social media platform you're watching. Your support means everything. Now let's get into today's topic.
Welcome to the deep dive. Today, we're unpacking inflation, and specifically, how it really affects your personal finances.
Yeah, it's a big one.
We're using inflation's impact and financial strategies as our source material here. And the mission, well, it's pretty straightforward. Figure out the key ways rising prices hit your money, and maybe find some actionable ideas.
Okay, let's get into it. It's kind of amazing how inflation works, often quietly, to change things financially. The first big thing is how it erodes your purchasing power.
Right, so the money you have, it just buys less.
Exactly, your dollar doesn't stretch as far. Just think, maybe a year or two ago, could you buy the same amount of groceries for the same cash?
Probably not. It feels obvious when you put it like that.
It's a real decrease in what you can actually get.
And that leads right into the next point, doesn't it?
Yeah.
Increased costs for just, everyday things, essentials.
Absolutely. Food, gas, utilities,
Yeah.
the things you can't really avoid buying.
Yeah, keeping the lights on, filling the tank.
And when those costs go up, a bigger slice of your income gets eaten up just covering the basics, which naturally leaves less money for other goals or even just, fun stuff.
Or saving.
Yeah.
Which brings us to savings and investments. This is crucial. If your savings aren't growing faster than inflation, then you're actually losing ground, right?
Precisely. The number might go up in your account, but what it can buy is going down. That's the real return.
So just saving isn't quite enough. You have to think about how it's saved or invested relative to that inflation rate.
That's it. Now, interestingly, the source also mentions debt, existing debt.
Oh, right, the potential upside. Is that fair to say?
Well, in a specific way. If you have fixed rate debt, like a mortgage, the payment stays the same. But if inflation is high and maybe your income rises a bit over time,
Then that fixed payment becomes, relatively speaking, a smaller part of your budget. Easier to manage.
exactly. It's an interesting dynamic.
Okay, so facing these impacts,
Right.
what strategies can people actually use? The source mentions some key things.
Yes, foundational stuff first. Budgeting. Really truly knowing where your money is going.
Tracking expenses, yeah.
Ah,
Seems basic, but maybe more important than ever now.
definitely. It gives you clarity. It shows you where the pressure points are, where you might need to adjust because costs are rising.
Makes sense. And that clarity probably helps with the next step, which is prioritizing, needs versus wants.
Right. When things get tighter, you might need to look again at spending habits. What's truly essential?
Maybe cutting back on, streaming services you don't use much, or eating out quite so often.
Could be. It's about making conscious choices based on your budget and the current economic climate.
The source also briefly mentioned investments that could potentially act as a hedge against inflation.
It did. Conceptually, things like, say, real estate or certain commodities sometimes hold their value or even increase when inflation is high. But that's complex stuff, not specific advice, obviously.
No, definitely not advice, just understanding the concept. And for savings.
The key takeaway there is trying to find savings vehicles that offer a competitive return, something that at least tries to keep pace with inflation, so your savings aren't just, eroding.
Like high-yield savings accounts or other options, perhaps, worth looking into.
Okay, so let's quickly recap. Inflation means your money buys less.
Everyday costs go up,
Your savings can lose real value if you're not careful.
but fixed-rate debt might become relatively cheaper.
And strategies. Well, start with budgeting. Focus spending on needs.
Understand the idea of inflation hedges and make your savings work harder.
That's the gist of it.
So for everyone listening, this really underlines the need to be proactive, right? To actively manage your finances. It's about understanding how these bigger economic forces, like inflation, are playing out in your own situation.
Informed action, not just reacting when things get tough.
Exactly. So thinking about everything we just discussed, here's something for you to consider. What's maybe one immediate step, just one thing you could take today to get a better handle on how inflation is affecting your finances and what you might do about it? Something to think about. Thanks for joining us for this deep dive.
Thank you for watching this video. I'm so glad you're here. If you enjoyed our thoughtful content, don't forget to like, share, and subscribe, and follow us on whichever social media platform you're watching. Your support means everything. Now see you soon in our upcoming video. Stay tuned and stay blessed.